What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 18th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to dive into the current state of the market as we've continued to correct from around 48,000 down here back again to the $38,000 to $39,000 range. And all the while, I understand that many of you might be cautious in this market, many of you might be concerned, or more specifically, just kind of left wondering, where's the trend going to go? I want to spend some time to share my candid thoughts and share why I still remain optimistic in this market. I understand it can seem difficult, guys, but stick with me through this video. I think it's going to help you guys out a lot. So let's go ahead and kick things off here. Now, the first thing I want to do here is just calm the nerves here around this correction. It's very easy to get tunnel vision. It's very easy to look at the 4-hour chart and think, oh my God, it's Armageddon. Bitcoin is down 19% since back here on March 28th. It's the end of the world. Bitcoin is done for. We're in for a bear market, right? Well, not exactly. We've done this many times here just within this year here in 2022. For example, let's go ahead and open up our chart here. We can see that here from January 13th down here towards around January 24th, we saw about a 26% correction in Bitcoin's price. Not very pretty. But afterwards, Bitcoin rebounded right back up to that range we saw before and even slightly higher. But then at that range, we had another correction. Bitcoin pulled back over 25% in price. And right after, in just a matter of a few days, we came back up to rebound, back up towards 45 to 46K. Similar resistance range. Then after that, we saw a pullback of 18% in Bitcoin's price, right? You'd start to think that after all these corrections we'd see, similar to the one we've seen now, around 18 to 19%, I should say that's about 20% exactly. That's where we saw the rebound. You would start to think that Bitcoin was over, that the market is ready to roll over and die, and we're starting to enter into a bear market. But there's been no sign of this really. Sure, the market isn't exciting at the end of the day, at least right now. But it never is exciting when accumulation is starting to happen, when a trend setup is beginning to build. And that's an important thing to understand here, guys. Now, if you want to wait to buy Bitcoin until it's trending higher, be my guest. That's totally fine. I'm not going to give you guys any grief about whether or not you want to buy Bitcoin or not now, right? That's not my aim here. What I want to focus on is the important fact that it takes time, especially in this cycle or this bull market where credit is driving cycles upwards and downwards. We need to understand that it's going to take time. It took time back here between May to July, or the late part of July, when we started to finally rebound higher. And on top of that as well, we have to consider here that we're holding up much better than where we did back here in January, here in June. Right here, from back here in January to here in April, we've been establishing higher lows and higher highs. This is showcasing the bulls are still in charge. No matter how concerned we may be, or how concerned some people might be, or how confident people might be saying that we're going to 20K, right? We're going to go do something that we've never done in history. We're going to come back down to the previous cycle's all-time highs in 2017, right? All these people who are calling these kind of things. So far, market price is not following that narrative. And we've been sticking to our guns here that this is not a time to panic. All the while the trend isn't very exciting, we like when the market is silent. We like when there's no serious hype or noise and headlines, because that, especially after those 30-50% corrections, that's usually the time to get bullish. That's the time to accumulate. Because if you don't believe me, or don't take me at my face value, you can simply take a look at price. Market order flow, people who are just basically buying and selling at the best available market price, the buyers are taking the lead here. The bulls are in charge with higher lows and higher highs. The same goes with limit order resistance or support through buyers or sellers. It's materializing through price, so the market's telling you everything you need to know. And if you take a look at the on-chain metrics, guys, it's important to note that the whales that everyone always talks about, the market manipulators, or those who are trying to basically toy with your emotions, they're not selling. Many of those wallet addresses, from 1 Bitcoin to 10 Bitcoins to more, right? Hundreds of Bitcoin, thousands. The number of wallets with those thresholds of Bitcoin are increasing. Market metrics aren't everything, but when you start to take a look at the market metrics, or the on-chain metrics for that matter, when you start to take a look at price, when you start taking a look at data science models, things start to become clear that all the while right now market price might look kind of scary, it's not the end of the world. We've not only done this before, but we're better off for it each and every time with higher lows and higher highs. Now, again, just to really put things in perspective, again, to make sure that we don't see this pullback, this near 20% correction, which can sound incredibly scary at the start, as some major pullback. Instead, we realize when we take a look at the data science models that this is right about where we should be. During much of the bull markets here for crypto, we usually hold through mid-range territory between the Bitcoin price prediction forecast model. So this is a mixture of a whole range of topping models and bottoming models here for the market, not just for, bull market tops and bottoms, right? Or I guess bull market tops and bear market bottoms, but also mid-cycle corrections. Sorry for the noise there, guys. I'm at my the house I'm staying in and stuff as I'm back in the States. And I've got an ice maker. The ice maker was disagreeing with me. But you guys can see here that we're just holding out quite neutral here, right around 40K. And that's right smack in the middle, generally speaking, between the 100, 200K resistance range that we're pretty damn certain we're going to see here, then the cycle for the top, and then also the kind of lower exacerbated range. Now, I understand some of you might be saying in this case that we should come down here, just like we did in the March correction, down towards this golden range. And what would you know? That would take us straight here to 20K. Now, I understand that many people will jump the gun to that conclusion, taking a look at this model. But I would ask that you emphasize and understand one key difference here, which is that overall for market price, we already, in this case, went higher and closer to the bands up here. Right? So back here, we were nowhere near upwards towards the higher end of the band. Therefore, right, we only went about midway through and came back down here to the line of support. Whereas if we were to do that from up here at around 60 to 69K, that would be one of the heaviest mid-cycle corrections we've seen in history for Bitcoin. No, that's... We can see here that roughly we're doing okay. We're not in exacerbated sell-side territory, and the market doesn't seem like it's signaling any significant downtrend like it had back here from June of 2019 to February 2020. Nor is there really any black swan or macro event that looks like it's coming up anytime soon. I think we've already had enough of those over the past few years. Let's take a look back at our long-term logarithmic chart for Bitcoin. We haven't changed this chart for the past few months. Really, since we've been calling for this December correction, we talked about the retest of this range back here. Similar range back from May and June of 2021, right, coming back down to that price range, and slowly but steadily accumulating upwards and setting up the stage for sometime around November of 2022, give or take a month, one way or the other, that we would see Bitcoin come up towards 150K to 200K in price. I'm not some magician who's going to tell you the absolute top. I'm not going to tell you exactly when it happens on the exact day, the exact hour, but I can tell you all with quite strong confidence here, we are probably going to see some top by the end of this year, or towards the close of the year. Again, let's go ahead and try to understand what we're calling for here. All we're asking for here from Bitcoin's absolute lows of the previous bear market in December 2018. Boy, I remember it like it was yesterday. It was not fun. You can see here that all we're asking for here, even towards our most optimistic price target at 200K, is around a 63 to 6,400% return. You can see it here indicated by the green percentage return calculation. Last time, we did over 10,990%, around 11,000% return in Bitcoin's price. Now, a lot of people would say that you can't even get close to the previous returns. It should be much lower degrees of multiples, but we're practically doing a little bit over half of what we did in the previous cycle in the sense of percentage returns. And on top of that as well, take a look back at the previous cycles here. 66,000% return and a 60,000% return. I think what we're asking for is quite conservative here. And not to mention, we have been on the ball since back during 2021 about expanding cycles, how it was going to take longer to get to these kind of highs that a lot of people have been quite certain of in the sense of price. Right? When we take a look at the data science models, when we take a look at even declining returns over time, we should expect that this is a pretty important psychological level, similar to how 10 to 20K last time was a very important level. But it's going to take time to get there. And so far, we've still got the room and trajectory to do that. Remember, back here in October of 2020, and we think we talked about this in one of our previous videos, in just a matter of a few months, we saw Bitcoin make sizable returns. And Bitcoin can do exactly the same here, right around the 40K range, all the way up towards $150,000 to $200,000. Now, one model I want to bring up that, interestingly enough, no one's been talking about because, unfortunately, it has not proven valuable in the way that most people utilized it, is the stock-to-flow model. I want to spend some time to bring this up. Now, you guys know, again, I've held my fair criticisms in this case for kind of the overall glorification of one data science model, and that is the stock-to-flow model, or one person like Plan B in the space. A lot of people took this model at face value and said it was the ultimate model and it is perfect for markets, right? And a lot of people interpreted it in a specific way, expecting that we were going to have some kind of super cycle in price, when the stock-to-flow really didn't point out to some kind of super cycle anytime soon. And we can see that in the way that it's worked over time. We can see here that as time progressed, the stock-to-flow has a declining, or I guess a decaying effect, if you will, on predicting the next breakout for Bitcoin's price. We can see here as the halving event happens, price starts to ramp up immediately in this case. In fact, starting to outpace its fair value according to the stock-to-flow. We see major upward deviations here. The next cycle here, we can see that there's more of a delayed effect. It takes time for Bitcoin to cross its supposed fair market value for the stock-to-flow model, going here into October and November of 2017 and leapfrogging up in December, with a slower and lighter deviation. And this time around, when we started to increase higher here, all the while we did see market price extending higher, and I think that's why a lot of people had confidence in it. The market was not really ready to push Bitcoin above that line. It wasn't ready to hold it up there and have a major cycle top. We didn't start trending above that line until we got into the green range last time. And this is the days from the previous halving. It's important to understand what this chart is projecting here. What's my point in all this? My point is that we have to be patient. This is not a time to panic, nor is it a time to bang the table saying, hey, where are my returns? The market doesn't owe us anything, guys. But I can tell you all one thing, which is that whether I was investing in stocks, whether I was investing in commodities, Forex, or crypto, I learned that patience pays. And another thing I would ask too is that all the while you can have a cash position. You can go out of the market. Not only do you have to worry about taxes when you make these kind of trades, so bear that in mind. Trust me, you're going to have to pay your taxes, especially if you're in the US or any countries that do have taxes for capital gains. But I would like to instruct one important point here, which is that where would you want to go? If you don't want to go into cash, or maybe you want to go into cash temporarily and then buy back in, where do you want to go? What asset class? Crypto has been continuously outpacing equities over the past few months. We can see this here clearly defined here on the chart here by just simply taking a look at Bitcoin's price, dividing it by the S&P 500. We've been continuing to hold up here on this size support, the higher lows since as far back here as December of 2020. And it's just a matter of time before prices spring up here and we start to really deviate away from equities, where the correlation breaks. Bond market is in absolute turmoil. These are kind of things that people in crypto don't really track. Maybe the other channels you guys follow don't talk about. And with all due respect to them, I think are things that can't be ignored and are important to understand. Crypto's holding up pretty darn well in the face of the Federal Reserve talking about major quantitative tightening. And not to mention one of the biggest wars or geopolitical conflicts of our time still going on. So, anyways guys, I hope this video provides some comfort for you guys, at least some rational understanding here of why things are probably taking longer than you expect. As each cycle comes up in the market, we're going to have to get more and more patient. And we're going to have to expect lower returns than the time before. But it doesn't mean we have to shoot ourselves in the foot and cut ourselves too short, just trying to take the gains of a mid-cycle rally. Or, worse off, sell in to a mid-cycle correction. So, anyways guys, thank you all so much for watching. I appreciate you all giving me some time out of your day. If you like this video, consider dropping a like. It is one of the best ways you guys can support the channel. And if you really like the content here and you don't want to miss another upload, consider subscribing and hitting that bell icon. But until the next one, everyone, have a wonderful day wherever you are, and I'll see you all in the next one. Take care, everyone.